Hello, everybody. ICICI Prudential has come up with India's first silver ETF. Now, this ETF will invest in physical silver and silver-related instruments. The NFO opened on 5th of January and is going to close on 19th of January. Now, to take this ahead with us, we have Mr. Chintan Haria, Product Development and Strategy at ICICI AMC. Welcome to the show.
Yeah, thanks a lot, Asta, and wishing all your viewers and listeners a very happy 2022 and a healthy one as well.
Thank you so much. We do wish the same for you. Moving ahead into the first question here, what is ICICI Prudential Silver ETF and where is it going to invest?
Sure, Asta. So over the last 4 or 5 years, we at ICICI Prudential Asset Management Company have made it let's say a motto or a guiding principle that whatever an investor wants to invest in India within the financial assets available for investing and available as per the regulatory norms, we should be able to bring it out to the investors. And as part of that string, we've already been launching a lot of ETFs, a lot of index funds for the investors to invest in. And we are very happy to bring India's first silver ETF as well for investors to participate in a metal which otherwise, in general, Indian investors have been investing and it stood the test of time for 5,000 years. But today it's finding principle across many industrial commodities as well or industrial applications. So silver ETF is a very convenient way for investors to participate and get the price of silver from their overall portfolio mix perspective.
Got it. All right, moving ahead, could you help us with the details of this NFO, for example, the period, the load structure of this fund, etc.?
So this ETF, that is the exchange traded fund, started on 5th of January, will go until 19th of January. And from an investor standpoint, since it's an exchange traded fund, there is no entry load, there is no exit load, much the same way as you would be selling on the exchange once it is listed, you'll be able to buy and sell on the exchange. During the NFO period, of course, you will be able to invest in multiples of rupees 100 or rather minimum 100 rupees and then multiples of 1. And once the NFO period gets over on 19th of January, around 26th, 27th of January or therein and thereabout, the units will get listed on the stock exchange, and both Bombay Stock Exchange and NSE, that is National Stock Exchange, for the benefit of investors would be 1,000 of the silver price. So 1 unit equal to 1 gram. 1 gram is 1,000 of a kg, and that would be approximately 60 or 62 rupees. So at a very low level of price, investors will be able to participate and accumulate units for silver in the silver ETF.
Got it. Okay. And what exactly are the benefits of investing in a silver ETF and why is it considered a hedge against inflation?
So generally, if we look at it, whenever there is inflation, what does it mean? It essentially means that the prices of goods and commodities are going up or goods and services are going up. And when do prices of goods and services go up? When the demand for goods and services is strong, ultimately leading to the fact that whenever economy is doing well, or whenever there is a good demand for a commodity or service, it essentially leads to the price rise, which is effectively inflation. In the last 18 months, from 2020 March to today, if we see, just one central bank, which is the American Central Bank, has expanded its balance sheet from $4 trillion to $8.5 trillion approximately. And the same has been repeated by Japan, by probably China, from European Union, in terms of making money easily possible or available for the investments. And that's led to a equity rally, that's led to a commodity rally. And also silver and gold have rallied, but if we see silver and gold, they are also good hedges against inflation. Plus, whenever there is volatility in other financial markets, silver and gold tend to give comfort to the investors and hence as a hedge to your overall portfolio. You may already be having a lot of equity in your portfolio and it has done well over the last 18 months. But to diversify your portfolio into precious metals, especially silver and gold, would also make sense today, given that silver and gold, after 11 years of consolidation, have finally now started to break out. And whenever that rally happens in gold and silver, it happens in a step-up jump. So to participate in that, if you start accumulating from today, you will get the benefit of silver demand improvement happening, plus the inflation hedge which you are speaking about. Thank you.
Right. Got it. Okay. Now, also, Chintan, a lot of people in India keep silver in physical form at their homes or maybe in their banks. So what are the benefits of investing in silver digitally for the investors?
Yeah, so the silver ETF or the financial instruments always make it easier. You don't need to step out of your house in today's day and age where probably you and I both are working from home thanks to the third wave. it has been difficult, and that's where we saw in the last 1.5 years, even gold ETFs pick up significantly. I think the AUM have gone up from 3,000 crores to 18,000 or 15 to 18,000 crores in gold ETF, because people realized the ease with which they could invest in ETFs and get the benefit of the commodity rise. If you have to basically buy and sell physical silver or gold, you need to go to the jeweler. Your pricing is totally at the mercy of the jeweler, which may or may not be the appropriate international price. Plus, as far as silver is concerned, it being a bulky commodity, to store silver is extremely difficult. And also in the case of silver, most of you would have seen, if you have silver spoons, silver plates, typically we give it to a children when they are born, they turn black. That will also happen if you have silver bars, right? If you have not kept it properly, exposure to the environment can cause silver to basically lose its outer layer in terms of the oxidation which happens, which obviously reduces then the price which you may get for the physical silver which you're keeping. In the case of ETF, all these problems don't exist. The purity of silver, which is London Bullion Metal Association approved, that will be there, and that is stored in vaults securely. The insurance costs, the purity, everything is taken care of by the asset management company. And you as an investor, all you need to do is just invest in the ETF, and you will have the physical silver of pure quality being stored in the vaults. As and when you need to basically book out of silver or book your profits, you can sell on the exchange your units and you are done. You don't have to worry about physical handling of silver, which itself is so difficult. And all of this is available at a very nominal cost in terms of the total expense ratio, which the asset management company charges to run the fund. And I think it would be in the range of 40 bips to 60 bips for most asset management companies. So for all the hassle that you would take in terms of taking out the silver and also the storage, the risks that are associated in terms of security of physical silver, plus the GST component, the tax component, and the spread which the jeweler will charge you. All of this means that if you have it in the financial form, you'll probably get a better price discovery, because the price discovery of silver ETF is as per international standards. So whatever is the international price converted into Indian rupees, that is the price which we will get in terms of the silver exchange traded price. Thank you.
Got it. Okay, now liquidity in ETFs is critical, and initially several gold ETFs suffered from poor trading volumes as well. So are the market makers there to, kind of take care of this fund?
Yeah, so market makers are intermediaries essentially who ensure that the right price of that particular ETF is there on the exchange, both on buying and selling. So obviously all asset management companies as authorized participants or market makers as they are called, who will be doing that, and they do it for the gold ETF as well. So earlier, when the demand supply obviously of gold was lesser in terms of the knowledge of ETFs, lesser people were invested, the liquidity was lesser. If we go back 30 years in the Indian equity markets also, there was spreads of more than 1% in the equity markets, because the demand supply, the efficient technology was not there. Today, with efficient technology, demand supply improvements happening in gold, we are seeing that gold is pretty much liquid. And with asset management companies who are truly dedicated to the business like we are, we have to ensure that the liquidity as well as the prices are in favor, or at least to ensure they are fair to the investors. And to the best of our ability, we will try and ensure that the liquidity on the exchange is there. It being the first silver ETF with maximum potential of investors participating, we truly believe with your help, we get all your investors to start investing in the ICICI Prudential Silver ETF, and liquidity will beget liquidity. More the number of people buying and selling a particular unit of ICICI Prudential Silver ETF, it will ensure the prices and the liquidity both are in fair for both buyer and seller.
Got it. All right. Now, Chintan, besides volatility, what other risks does an investor need to consider before investing in this ETF?
Sure. So if you look at from a silver ETF perspective, price volatility is understood, like you said, because silver as a commodity keeps moving sharply. It has step-up jumps, and then it consolidates for a long while, and then again it has a step-up jump, and that's what it's been doing for the last 30, 40 years. The only thing which I want to add here is that silver as a commodity is finding application in many of the key cutting-edge businesses right now, in terms of electric vehicles, in terms of 5G mobile technology, in terms of solar technology. Just to highlight in terms of numbers, the solar energy technology today consumes about 10% of the global silver produced. It used to be 5% earlier. And silver as a commodity cannot be printed, right? It has to be manufactured, it has to be mined, and the mining is predominantly located in South America. Mexico, Peru being the largest, along with China, of course. So 50% of the production comes from these three countries. So silver cannot be created from thin air, and when the demand from these applications, we all know solar is increasing at a rapid pace. We know electric vehicle technology is increasing at a rapid pace. All of this requires silver, and even our mobile phones, high-end mobile phones have silver. So effectively, if we see, the silver demand is going to improve, and if the price or supply does not keep pace, silver will silver prices may also end up supporting. So from an investor standpoint, this silver volatility is there, but the application of silver in many of these cutting edge businesses will support the prices. The risk, of course, is that if there is a global meltdown in financial assets, that temporarily impacts every commodity. So all your investments will get hurt. And there we did some analysis in the past when there was this last financial crisis, the Lehman crisis in 2008-9, and our equity markets fell very sharply. At that point of time, in fact, silver supported those investors who were diversified. So from, I think, January 2008 to October 2000 or mid 2009, where markets fell by 54%, the silver prices actually went up by 10%. So I'm just saying that there is not a correlation which is positive. The correlation is negative. And investors, in fact, can diversify their portfolio, hedge against inflation, plus hedge against volatility in their existing asset class, which is equity. The risks continue to be if something goes wrong in silver, and if there is another commodity which is found as a substitute for silver, which is difficult given that silver's properties are what they are. But those financial risk, global financial risk, and a meltdown is something which is a risk which we carry. Other than that, I don't see any other risk which potentially can be there, because even the physical storage, etc., of silver, which is there in the vaults, is audited, and it is something which is regulated from the regulator standpoint. Thank you.
Got it. Okay, now moving ahead to the next question here. What position should it fill in an investor's portfolio, and what kind of investor is this theme best suited for?
Sure. So in terms of investor portfolios, we are very, very fond of the asset allocation model which investors should follow. So you should have equity, you should have debt, you should have international equities as well. You should have gold, and now you have the ability to have silver as well. Mm-hmm. If you ask me, for majority of Indian investors who have a 10, 20, 30-year time horizon, you should have about 50% in equity at least, because equity asset class is good, and you should know how to invest in equity. So I'm not saying you should be in mid cap, small cap all the time, right? So that's where a professional fund manager or someone who is handling your money professionally will help. But 50% in equity for most Indian investors, 20, 25% in debt, the balance 30% which is there, 15% can be in international equities. We've seen international investing becoming very popular. Yeah. Then again, you should diversify and not have all your eggs in one basket in terms of the technology shares, because that can hurt. The balance 15% which is left, I would say 10% in gold, 5% in silver today is a good metric, because gold and silver have underperformed other asset classes significantly. So 10% in gold, 5% in silver is a good metric to go by if you have your overall asset allocation mix in place. And whenever you do get a chance to rebalance, you should keep rebalancing and adding on to gold and silver. Because today, globally as well as in India, the investments in gold and silver have been very low historically. From a financial standpoint, as jewelry we've been buying, but from a financial diversification, it's been low. And courtesy the performance of equities being so strong in the last 1.5 years, anyone who had, let's say, 30% in equity earlier now has 50% in equity. If someone at 50, he has 70. So he or she should do well to basically look at the allocation and move some part of the equities, maybe profit booking across mid, small cap if you're overweight there, and look to diversify it into gold and silver. It will look probably right now less sensible to do it, but when actually the markets turn, it will end up being a good decision for investors. Thank you.
Got it. Okay, one final question before we close, Chintan. What is the investment horizon for this fund when an investor is investing in this?
So there are two categories of investors who can invest in this. One who basically have silver, physical silver stored all the time with them. They can convert their physical silver into the silver ETF and stop worrying about the physical part of it. The second is those who have asset allocation models and who tactically allocate, right? And today, by virtue of silver having underperformed over the last 10 years, last 10-year returns of silver, by the way, is only 2%, right? So just 2% CAGR return versus a Nifty return of almost, or a market return, I should say, of almost 11% or 10%. So clear the underperformance of silver, and that too after the last 1.5 years where silver has actually gone up from 30,000 to 60,000. So After going up that much, it is at a 2% CAGR. So from a silver allocation perspective, I would say the horizon should be minimum 3 years time. But whenever you do get that big spike in silver, which keeps happening once in a decade, you may want to look at reallocating and rebalancing. So if you keep your asset allocation mix right, and if, for example, today you have 10% gold, 5% silver, by virtue of price rise and other asset classes doing well, if silver becomes 10%, you may want to reallocate that back to 5%. So I would say that keep your asset allocation mix in right, have a 3-year horizon. Within next 3 years, there could be a potential spike in silver, which may be coming because of how the cyclical nature of silver works. That time you can look to reallocate. Thank you.
Got it. All right, Chintan, thank you so much. It was such a pleasure to have you with us today. And this was a very informative Q&A session, of course, for me. And I'm sure it might be for all the viewers as well. We do wish you all the very best for your ETF. Thank you so much.
Thank you for your support. I'm looking forward to all the investors participating in the ICICI Prudential Silver ETF. Thank you. Thanks a lot.
Brokerage shall not exceed SEBI specified limit. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.